FTC, but talk about the personal finance corner as well. Faye joins in, and Faye, what's up for discussion today?
Well, considering that the RBI governor threw a bit of a googly earlier this week. Big googly. So what happens to those of us who are investing in debt funds? How do we call this interest rate cycle? Where are we right now, and how do we time it? Should we time it at all? That's what we're doing today. Let me bring in Dhirendra Kumar. Dhirendra, thank you for joining us. Now, the RBI decided to surprise the market and raise interest rates at a time when the general consensus among analysts was that they would remain steady. Tell us what your view is right now on the way the rates are moving. What part of the cycle are we in?
No, these are very unusual times, and for the first time, not for the first time, but now with the new governor, we have seen 3 rate hikes, and we see a completely changed, tone in terms of setting, for us to have the, have the direction or some kind of sense in terms of outlook for interest rates. And the governor has made it very clear that he is combating inflation. He is entirely focused on that, and he will do everything possible in terms of monetary initiatives to tackle that. And for him, that is the topmost priority. But the other side which is needed, which is a government, and that too, as we get closer to the election, the vote on account or the interim budget will be announced, and we will get some sense of number. But that part, I don't think that we should be expecting a rate cut, and it will be entirely guided by inflation. And even on the inflation now, consumer price inflation is the reference now. So in that sense, it is extremely difficult to predict that, and I don't think we should be expecting the accelerated rate cuts which we got used to, that any sign of decline in inflation and we should be anticipating or expecting a rate cut. That looks unlikely.
Alright, so Dhirendra, if that's the case, then obviously we should be staying away from dynamic bond funds and focusing on short-term funds. Would you give us your recommendation of short-term debt funds that we can focus on at this point?
Yes, we have a wide variety of, the range of performance from the short-term bond fund is quite varied. If I have to choose some with impressive track record and lower expense, which is quite material in this category, I would say Peerless short-term fund, the FBI Magnum floating rate short-term fund, and the Taurus Ultra short-term fund.